Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 18th of July. All right, as I just take you into the MyFX Trading Hub, just looking at the overall trading conditions now. If you look across the backdrop of the technical and central bank outlook here on the new table, let's get my pen up. The only change across the board here is sterling, and it has broken down through some sort of longer term trends. Now, Boris Johnson, a big pro-Brexiteer, is very much in the lead for the new PM job in the UK. So that's, because he's so pro-Brexit, they're thinking it may be a bit of an ugly Brexit deal, or they'll walk away with no deal. And that means sterling weakness. So that's the only change we've seen. So what we've got is today's trading market conditions, normal market liquidity, but we've got no momentum, right? There's been no major data. And if you had watched any of the other videos this week, you would have seen, obviously, the Fed funds rate decision on Wednesday is the key data. We do have UK and Canadian CPI out today, Wednesday as well. So those big data releases will diffuse the market somewhat. The current technical outlook will probably stay in place until we do get some clearer understanding of what's going on in the economies, UK, Canada, and most importantly, the US. Now, so that's what we've got. Obviously Brexit and the US-China situation still simmering away. There's also the build-up of tension in the Middle East around these oil tankers getting hit, and Iran and the whole nuclear sort of mumbo jumbo. If I just give you a look at the news pages here, you can start to piece it together and see where all the craziness is. Now, a lot of the market focusing, since there's no activity in the markets, they will put it down to dollar steady ahead of Fed meeting. Low chance of June rate cut. There's no chance of a June rate cut. I mean, I'll eat my own hat if that happens. The data isn't substantially weak. It's slightly weaker, and we've had slightly stronger data before. They're on plan to probably stay ready at this stage. What is happening, we're starting to see a bit more of a kickback in the US, though. US firms saying China tariffs will raise costs. Of course they will. They actually switched all the manufacturing to China because it was much cheaper to get the product. So it is going to cost more, and that's a cost of doing business. So that's what the US economy's got to do. So in the back end, Trump is strangling China, but what he's making the US do is really kick these manufacturing and all these things back into gear because of higher wages and higher costs. The goods are going to cost more. So there's a bit of a battle there, how that's going to balance out. The Fed have got no control on that, and that will be doing their head in. Obviously, the US says to send more troops. I mean, that's a really great deflector for Trump. He would be loving this international mumbo jumbo because it deflects the spotlight on him on the domestic side of things, where they're still trying to impeach him on about 100 different things. Now, the charts, Aussie, well, I mentioned it yesterday, we're in a really good sort of downtrend at the moment. There's no reason to be buying Aussie dollars. The only reason it pops up through sort of 68.80 or 68.70.80 for that level, for that matter, is if there's some weak US numbers or just a bit of a short-term stop-loss run, and then it should continue lower. There's absolutely nothing glowing in the Australian economy. So, and with the RBA still on that cautious side of things, it's got lower levels to come. Kiwi following suit, but you know what? It's forming a base here just around this 65, the figure level. If it breaks down through sort of 64.80, well, then we're starting to talk about a breakdown the daily and weekly charts, and that gives it more of a bearish signal. But at this point, it's actually holding up pretty well. Dollar yen just trading sideways. Pretty much, it's having a dabble through this resistance line. There's not a lot of credibility with it. It's through the cloud. There's no major momentum here. Once again, until these international issues, especially the US-China situation, escalates, I think dollar yen's still got room to move to the top side. Euro, well, we had that breakdown on Friday. It's now sort of back trading, it's starting to form that range again, but I wouldn't be surprised to see it back to 112.80 where it was on Friday before the FOMC. And here you can start to see sterling breaking down through 125 sort of 80. Boris Johnson in front. We've got UK CPI today that's going to come into play, maybe. Who knows? And then dollar CAD. Well, dollar CAD's moving to the top side. Oil, though, isn't moving a hell of a lot just at the moment. So that could really come into play if tensions in the Middle East escalate and if there's more disruptions with supply of oil. So that's, you got to really understand what you're doing in these markets, because it's starting to get a little bit tricky, right? So to me, I'm just coming back to the MyFX Trading Hub and trying to piece this together. Well, there's only one pair that I'm sort of really concentrating on. I mean, it is the Aussie, okay? Obviously, the Aussie US being the main part. But don't forget, you've got Aussie yen, you've got all the Aussie crosses. You can really handpick or cherry pick the best Aussie cross to be getting short, because at this point, that's the only pair with absolute clear direction in my eyes. Now, upcoming events today, well, we do have the RBA monetary policy meeting minutes, okay? They will be released in about an hour and a half. Sorry, I should just having a look at the clock. So an hour and a half, we'll get some more ideas about future forward guidance on rates by the RBA. They have been bearish, so I can't see that changing. If they add to that dovish tone, well, then Aussie should see a little bit more of a push to the downside. If there's no sort of real revelations, well, then it probably just trades sideways. I don't think at this stage we're going to see any change of their stance and see them go to a neutral or, definitely not a hawkish stance at all. All right, and that's pretty much all we've got to look forward to. Don't forget, Wednesday, everything really kicks off, okay? We've got CPI numbers, most importantly, the Fed, the FOMC decision. No change in rates expected, but the statement is going to be very, very important, and we'll see how things map out there. And if I just give you a bit of a quick look at the overall perspective of what's going on in the rest of the markets, equity markets pretty much flat. Check out this price action on $1, the offshore one. It's pretty much, this is flatlining, right? They've had that move up when Trump increased the tariffs and the tensions increased and China started adding tariffs to the US. Now it's flatlining. We are waiting some sort of decision here from either China or the US to see where that goes, okay? A good decision for China, we see it lower. A bad one, we see it much higher. And the dollar index, as you can see, if you put it over a bit more of a longer term perspective, it is just trading sideways. All right, guys, that's it from me. Have a good trade day. We'll see you in the 247 trade zone if you've got any questions. All right, guys, have a good trade day. Cheerio.